Hi, this is Bob Iaccino talking Euro currency futures from the CME Group trading floor in Chicago. Well, the weakness in the euro continues over 0.5% today, and that weakness really started, today's weakness anyway, started when the U.S. made their Tomahawk airstrikes on the Syrian Shayat air base that supposedly the chemical attack on the Syrian population was initiated from. Now, 59 Tomahawk missiles were fired at the air base. Russia claims 23 landed. The U.S. claims that all 59 of them landed. But either way, the euro weakness started there. But unlike some of the other currencies, it didn't recover. Dollar weakness started there as well. Dollar weakness against the yen and the Swiss, which are both safe haven currencies. But most of that recovered in by the end of the day, and the euro did not. Now, a lot of that could have to do with a couple of other things I want to talk about. Number one, earlier in the week, Mario Draghi made some comments really pointing toward euro weakness. He said that the policy of the European Central Bank is probably appropriate right now, and it is inappropriate to start tightening yet. So that kind of went contrary to what the market was expecting. The market is expecting the ECB to start to get a little bit more aggressive, especially in light of Fed aggressiveness that you saw in the Fed minutes as well as in the March tightening. Now, considering today's payroll data, which a lot of the US data is starting to seem to be mild to weak, actually, the jobs data didn't disappoint that sort of view. Even the PMI, or the ISM rather, which had a good headline number, had a weaker employment component to it. And if Mario Draghi is looking toward the Fed potentially slowing down the pace of rate hikes that the market thought it was trying to message the market to say they were getting more aggressive, and they were going to start to trim their $4.5 trillion balance sheet, which is an aggressive stance, then Draghi is definitely talking the markets down off of the tightening ledge, saying that the current situation is appropriate and that it's inappropriate to start talking about tightening. Back to that US data, it's been sort of fair to weak this past week. Now, when you look at the jobs data specifically, slowing in the US is not good for the euro currency, because in order for the euro to recover, the European Union has to recover. In order for the European Union to recover, the U.S. has to have a strong economy, at least an economy that's in a slightly upward trajectory, because we are their largest trading partner here in the U.S. Now, also, we've got the French elections coming up. Granted, the first round isn't until late April, but it's going to start to weigh on the euro because 2/3 of the French electorate still identifies as undecided. So if the right-wing candidate gets strong footing in the polls, that'll weaken the euro as well. This is Bob Iaccino talking Euro currency futures from the CME Group trading floor in Chicago.